take heart from the Alcoa numbers? Do they bode well for the earnings season?
They certainly do bode well, and not just because of Alcoa, but because when you look at, and I was looking at the earnings figures for the fourth quarter of last year, and 4 out of 5 US companies reporting beat their sales and or profit expectations. And that's one of the reasons why the market's been rallying ahead. I expect that in this quarterly earnings season to continue. Partly it's a function of expectations still being relatively low. We just don't expect amazing things out of corporate profits, yet we're getting them, and that's why we're going to continue seeing the markets progressing upwards.
You know, a number of houses expect a seasonal stock slump between May and I think it's October. It's happened for the past 30 years. Can the central bank stimulus help avert that, or at least temper that a little bit?
I don't think that the central bank stimulus is directly looking at stock market asset prices, because it's not something it's going to be directly concerned about. It'll just happen as a natural consequence of all the quantitative easing that we've already seen to date, which just makes bonds far less attractive, of course, because their yields have been so much pushed lower. But as you say, statistically, that cycle of May to October not being fantastic will probably not be broken. It's not to say that we're going to get worryingly negative performance on the markets. It's just that January, February, March, April just tends to be stronger. So I wouldn't say I'm worried about how we might perform over the next 4, 5, 6 months. I still think we're in a pretty good environment, and I'd certainly err on the side of keeping exposed to equities rather than pulling out and going to sleep or hibernating for a few months.
When does the yen get to 100? When do we get to dollar yen? When do we get to 100 on dollar yen? Sorry.
It looks imminent, doesn't it? And I remember when I was working in the States back in the mid-90s when that happened, and we were all getting very excited about that. But you know what we've got? We've got two pushes here. We've got the dollar not being as worrisome in a currency as we had initially thought with this flood of money, worries about debt, worries about its grading by the credit agencies. And of course, you've got the policy from the Japanese central bank, which is making it very clear which way they want to go. So it looks inevitable, and I'd probably say within the next month, if not sooner.